Good morning and welcome to your Financial Power Hour. This is Jason Cryderman with Great Lakes Investment Advisors, and I'm here with my co-host and my good buddy from over in the Minneapolis, Minnesota area, Mr. Tony Shore. Tony, happy Monday when we're recording, but happy Sunday when our viewers and listeners are seeing this. So how the heck are you today, Tony?
I am doing great, Jason. Thank you so much. Yeah, happy Sunday. And I've had a great week. Last weekend, got to see my mom and dad again, drove down to see them and hang out for a day.
Good.
And then had Sunday, just watched a little bit of football, and then had a date night with my wife, just the two of us. That
Nice.
was no kids and their significant others, no friends, just the two of us. Hadn't done that in a while. So it was time. We went out to this great new place in Minneapolis called The Market, and it's a huge old warehouse building that they've renovated to be really cool, lots of seating, and it's got all these different places to eat in it that you can go up.
Really?
But you go in and you give them your credit card, and they give you each a card. And then they have taps along the wall. You ever been to one of those places?
No, never.
Where you just put the card. They give you a card, and you pay for all you do to pay for what you want. You just point it on the thing, and it beeps.
Interesting.
And then you if you want to try that much beer, it charges you by the ounce.
Really?
So you can try. And then they have tons of beers and wines and everything out of these taps. And so you just try. Oh, I have a half a glass of this. Oh, I'm going back for a full glass of that. So you can try different things. And they have wine and hard ciders and all that type of stuff, hard seltzers. But the food is amazing. They have a great Mexican place in there, and it's all just open, and it's packed all the time. But there's always seating because it's huge.
So you could pick and choose. Like you could get Mexican, and your wife could get Chinese or something like that.
In fact, I got tacos. I got the fresh walleye fish tacos, which was it was amazing. And she got some kind of like chicken on a stick, like a chicken skewers that were delicious with like a peanut sauce. Really good food there. So we had fun. Yeah. And it was a fun atmosphere. So that was great. Yeah.
Very good.
Yeah.
Did you happen to catch any of the Lions game?
I saw highlights. If you're a Lions fan, we'd call those highlights. If you're a Titans fan, a lot of lowlights.
Those are the lowlights for the Titans. Yeah, and it's been a kind of a low season for them. We talked a little bit about before the show that, boy, those just not a good year. They come into the game at 1-5, and you come up against the Lions at 5-1. Lions played very good, but again, it's hard to tell how good did they really play when, unfortunately, the poor Titans. I mean, they just. I was telling my son Carson. I said, Carson, I actually in the third and fourth quarter, I really felt bad for those players because they're professional athletes and they're trying their hardest and they're really laying it all out there, but they just could not complete anything. I mean, they really. And it was almost like that the snowballing compounding effect that once that snowball got rolling down, I mean, they just the wheels fell off the bus. And, just unfortunate for them. Obviously Lions looking really good right now.
You scored over 50 points.
Yep, scored over 50 points. Very rare. That was a record because it hasn't happened in like 30 or 40 years or more.
Yeah.
So pretty exciting. Yeah, pretty exciting. We'll see. So today, as our listeners are listening to this show, you're listening to it on Sunday morning or catching it on the YouTube channel, or maybe you're listening to a replay. But if you're listening to this live in the morning, today our Lions, Tony, are heading off to Green Bay. They'll be playing at Lambeau Field, and so that'll be a heck of a game. So I know you and I talked a little bit about it because that's, as we record, that's a week away, right? So but boy, we're traveling to Lambeau. We'll see how that game ends out. What do the Vikings got coming up?
Yeah, we play. I think they moved us. We were a Sunday at noon game or a Sunday at 3 or 4, but they are a 1 o'clock game or 4. But they moved us to the Sunday night slot. So I don't know if there are 2 Sunday night games this Sunday night or if it's just us. But we play the Colts in Minneapolis, and I will be there. I've got a buddy.
I was just going to say, is there anybody that we know, Tony, that's going to be in attendance at that game?
Yeah. In fact, I have a friend who works for Andersen Windows. He's a VP at Andersen Windows, North America's largest window company, by the way, based right here in my hometown of Stillwater, Minnesota.
Is that right? Didn't know that.
Yeah. And anyway, a good friend of ours, he said, "Hey, Tony, you want to go to the Vikings game? I got a couple of tickets. I got an extra ticket. You want to go with me?" And I go, "I'll go with you to the game." And
heck yeah.
So we're going to play the Colts. It should be a win for us, and we shouldn't have a problem there. We'll see. But it's a Sunday night game. I'm looking forward to it. I haven't been to a game yet this year, so I usually try to get to a couple.
Hey, I'll keep an eye out for you. I'm sure Carson and I want to watch the game at least till, about just after halftime there, because Sunday night late game, I like those games. But boy, after you have a long weekend and then all of a sudden you think about we have school and work in the morning, it's hard for me nowadays. Here I am at 50 thinking, geez, it's 9 o'clock on a Sunday and I can't stay awake anymore. And, I think just 5 or 10 years ago, it was nothing to stay up and watch those late games. But I'm sure Carson and I will be watching the game and we'll keep an eye out for you.
Yeah. I shouldn't be hard to miss. I'll have some, I'll be in purple.
I'm sure you will. Helps. I don't know if anyone else there will be in purple, but I'll probably pick you right out of the crowd.
Yeah. I don't know how you'd ever find me in that crowd at US Bank Stadium, but yeah, it'll be a fun one. I'm excited to go to a game finally this year. Have you been to a Lions game yet this year?
Haven't been this year. No, we were fortunate. We were fortunate to make it down to 2 games last year. One regular season, one playoff game. So we haven't been to one yet this year. And I looking at my calendar ahead, in the foreseeable future, I'm not sure if we're going to be able to make it down. We have so much stuff going on with the kids, with Lexi being a senior this year. There's a lot of senior festivities and activities that you have to do as far as there's a lot of lasts. Like this past Friday, she had her last varsity football game where she's drum major. So she marches the band from the high school across the complex into the football stadium, marches them around the track, marches them onto the field, conducts them from up on the podium as their drum major. And so this last week was the last of that. She's also a varsity cheerleader, so she cheers out there on the sidelines. And this last Friday was the last of having Lexi be a varsity football cheerleader. So there's a lot of lasts that come into the senior year, and there's also a lot of firsts, like what she needs to do to get ready. Actually, tonight, this will be last week for our listeners and viewers, but tonight, Tony, as we're recording, we actually have the privilege of going and watching Lexi be inducted into the National Honor Society.
Oh, so, nice.
Yeah. She has her National Honor Society induction tonight. And
that's great.
It's crazy. It's crazy to believe that she's already a senior. Lexi's a junior. Carson's in 5th grade. Boy, and before we know it, he's in 6th grade. And before we know it, Lexi will be off and gone, and then Josie won't be far behind. And then maybe we'll have time to do those one-on-one dinners with you and your wife without the kids tagging along. And
yes, those days will come. Those days will come. It's been a long time coming for us, I'll tell you that. But that's really neat. You have that going on. Now, with the Lions, you might have more opportunities, though, in the postseason. In fact,
let's hope so.
I mean,
the
Lions look like they could go all the way. You might have to take a second mortgage out on the house and get some Super Bowl tickets.
Well, I don't even know about the Super Bowl tickets, so let's just even talk about playoff tickets. I was looking at some tickets just to this year's games, Tony. It's amazing. The price of the tickets from just normal tickets to normal games from last year's games to this year, and some of them are 2 to 3 to 4 times as much money because the Lions did so well last year, and they're doing so well this year. And I just can't believe the price of that. So think about, like, last year we got an opportunity to go to a playoff game. I can't imagine what the price of those playoff tickets will be this year. And then, like you say, especially if they make it to the Super Bowl. And of course, Carson's already begging me, Dad, if we get the Super Bowl, you got to buy tickets. We have to go. And I said, well, I'm going to see if I can borrow some money from our good friend Tony Shore. And then maybe we can go
dig into that old radio show co-host salary. Yeah. Super Bowl tickets. I don't think so. Let's see. Do I want to own a home or go to the Super Bowl?
Well, that's it. It's like, well, if you want to go to the Super Bowl, Carson, we might have to live in the truck. We sell the house, we live in the truck. It's a great opportunity, but I'm not sure it's one of the wisest ones we want to make. And, thinking about that, we talk all the time on, of different being in the financial field, obviously, decisions that we make in our personal lives. And, is that a decision I would have made from outside of my financial background or inside of my financial background? And so I talk about the kids a lot. If we did something like that, that probably wouldn't be what I would call financial advice from myself. It would more be, personal outside of taking my financial advising hat off. But think about those decisions we all make, right? We all make a lot of decisions throughout our daily lives, and whether it's in our careers or our personal lives. And sometimes we think, well, that's a great decision, but maybe not the best decision from one aspect or another. And that's kind of what we're going to talk about today in the show, are just different choices and options. And we think about like the decisions we have in our personal life to make choices and options. Do we go to a football game? Do we go to a playoff game, or do we spend that kind of money that we might have to refinance something or go without to go to something like a Super Bowl? And what an amazing opportunity. But we got to look at the pros and cons of all the decisions we make. And so that's kind of, Tony, what we're going to talk about today on the show, is some of the ins and outs and goods and bads, or pros and cons, if you will, of different types of investments, different types of investments that people can make in their financial life, whether this be inside your 401k, your Roth, your IRA, or any other type of investment tool or vehicle out there. So I think it's going to be a great show. We're going to talk about a wide range of investments. We're going to talk about some pros and cons, and I think our listeners will really appreciate today's show.
Yeah, I think they will as well. This is great, talking about the different types of investments, this versus that. I know we're going to talk about a lot of different things you help your clients with. So the different types of investments, the pros and cons of each. But before we do that, let's give away a few copies of your book, Empower Your Retirement. And listeners, this is a great book. Each chapter is on something and goes into detail on things you really need to know to get your finances in order and to get a retirement plan in place, a solid retirement income plan in place. There's chapters on taxes, on Social Security, on healthcare and retirement. So it's very important. Get a copy of Empower Your Retirement. Jason wrote it with his dad. He's giving away 10 copies right now to the first 10 people who call up and say they heard about it on the radio show. Request a copy of the book. Even if you're watching YouTube or listening to the podcast, say, I heard about it on the radio show. 989-835-7203. Pick up the phone, that number again, 989-835-7203. And you can also visit the website for more information, GreatLakesInvestmentAdvisors.com. And we're going to kick off this show in just a moment. All right, you're listening to Your Financial Empower Hour with our host, Jason Cryderman. I'm your co-host, Tony Shore. And Jason, you said today you wanted to talk about some different investments, how they compare, the pros and cons of each. I know that, Jason, you must have a number of different investments and vehicles that you use, products, vehicles, investments for your clients to help get them to their goals in retirement, or help them reach their goals, make sure their money lasts as long as they do. Where do you want to start? What types of investments, just to give us a ballpark of what we're looking at here?
Yeah, so there's a lot, Tony, and you mentioned, what phase of someone's life they are in. I think it's very important. So in the last segment, you mentioned getting a financial plan in play, and then you followed up by getting a retirement income plan in place. So we're really going to break down a lot of different types of investments today, Tony. I do want to make full disclosure right now that this is not necessarily direct investment advice that we're going to be giving on today's show to any one investor or any individual out there today. Really, it's going to be more geared towards, let's talk about all the different phases of the life we're in. What different choices and options of investments do we have out there at our disposal based on what your goals and objectives are? And so a lot of people out there listening are going to be, hey, I'm in maybe my 20s or 30s. Well, your investment choices, your goals, your objectives, the vehicles you use, the management philosophy are probably going to be a lot different from our listeners and viewers today that are thinking, gee, I'm in my 70s or 80s. you're going to have totally different investment management philosophies. You're going to use totally different tools and vehicles. So again, from a fiduciary advisor standpoint, myself and my team are very knowledgeable of what choices and options are out there, no matter what phase of life you're in, no matter if you're in your 20s, your 40s, or your 70s. We are very familiar with a lot of different tools and vehicles out there. So that's important to point out, Tony, because I definitely don't want people to think, well, gee, Jason said, XYZ was the best for me. This isn't about advice. This is how XYZ might be great, but it also might not be. And depending on your unique situation, you want to get personalized advice on what is right for you. And then that's where, like Tony, you mentioned having a written plan. Everything you own should be because it's in your best interest. The tools, the vehicles, the management philosophy, everything should be 100% because it's in your best interest to help you most efficiently accomplish your goals. And so it's important to cover all these different choices and options of investments because they all do have goods and bads. They all do have pros and cons. So it's important we understand the pros and cons and we're applying the right tools and the right investments to our situation so we can be most successful at accomplishing our goals.
Yeah. Yeah, I think that's huge. So what are some of these vehicles and investment options that we're going to talk about today?
Yeah, we'll kind of maybe start from very simple and ramp it up a little more to complex throughout the show. Very simply, obviously, most people are familiar with a savings account. We have savings accounts, we have checking accounts. Those are what I'll call more of our daily local and liquid accounts, right? They're at the local credit union, they're at a local bank. We put our paychecks in those accounts. We write checks out of those. We have an ATM debit card. Maybe we pay some bills out of those accounts. Those are very fluid, very liquid. And there's a trade-off generally when you have local and liquid and fluid. Generally, the trade-off is you don't get as much of a return. They're really not like a long-term growth investment. They're more of a short-term, a good holding spot for liquid transactions.
Maybe an emergency fund.
Yeah, maybe we have an emergency fund like we've seen with the last year or two here with interest rates going up. Obviously now Feds are starting to draw interest rates down a little bit, but we're still seeing elevated interest rates where people could still get a higher rate of return than we're used to in a savings or checking, or even like an emergency fund, like the old term was a Christmas account or an emergency slush fund account.
Yep.
So money markets, stable values. We're starting to see a little bit, or in the last year anyhow, we've seen higher interest rates in those accounts than we were accustomed to for the last 10 years or so. Again, those aren't really designed for growth investments, though. These are more liquid, local, more transactional. Then let's stay in the realm of like the banks and credit unions. A very common investment years ago, not so much up until about the last year, was a CD, a certificate of deposit. CDs were very popular when you could get 4, 5, 6% or more. Well, unfortunately, we went through about an 8 to 10 year or longer span up until last year where interest rates were very low. Most CDs were very, very low single digits. We're talking maybe 1%, 2% for a 5-year CD or longer. Whereas now it's very fortunate these elevated interest rate environments we're in, people are still able to get north of 4% from a bank or a credit union in maybe a 6-month, 9-month, 12-month CD. And now the pros of a CD are there should be no fees. There should be no risk. You should get a guaranteed rate of return as long as you leave your money there for the term of that CD. One of the cons of a CD, though, unfortunately, is you can't access the money without some form of fee or penalty. Most CDs are going to have a liquidity penalty or liquidity fee to access any of the money at all. So you need to be aware of that. That's where you got to make sure if you need this money in 6 months to buy a car or a house, you don't want to invest it into a 1-year CD. It just doesn't make good financial sense. So there's pros and cons of a CD. Excuse me. We look at other investments out there, then we can get into such things as maybe a fixed annuity or a multi-year guaranteed annuity. These are still safe fixed vehicles. So we're kind of getting from the safer fixed vehicles, escalating more to where we'll get into stocks and mutual funds and those types of things. But the fixed annuity or multi-year guaranteed annuity is very popular right now as well. Some of the pros and cons, first of all, an annuity is issued from an insurance company. So it's not usually through a bank or a credit union unless they have a direct affiliation with an insurance company. And an annuity is where you give an insurance company your money for the promise and return of a return on your money and or income, future income of your money. And one of the we're also seeing with elevated interest rates right now, Tony, we're seeing in the multi-year guarantee range from maybe a 3-year to a 5-year term, we're still seeing north of 5%, which if you can invest at 3 or 5-year, get a 4.5, 5.5% that's guaranteed every year for the term of that contract. I think that's a good thing because as we both know, and all of our listeners and viewers know, interest rates as they come down, rates are going to come down. So if you can lock in a good rate, Tony, I can't hear you.
Oh, they already have. They already have with CDs. You see them start coming down.
You're starting to see them come down.
Yeah, and one thing I wanted to add to that, the MYGA, multi-year guaranteed annuity, or MYGA that you talked about.
Yep, that's right.
I was with my dad, and he had sold a tractor. This is a few months ago, but he said, I want to put that money in a CD. And I go, well, let's look at it. Is this money you're going to need within the next year? And he goes, no. And I go, well, what's the best rate your bank can do? And we checked. And to get a 4.5% guaranteed rate, which was the highest the bank is currently offering, or 5%, the longest period he could get that would guarantee that rate is 7 months. So he can only get 4 to 5% for 7 months. But we looked at the MYGA, and you have, which is very much like a CD, except it's through the insurance company instead of the bank.
Correct.
Your principal's protected, but the MYGA, you could get a 5 or a little over a 5, and you could get 5 years. So,
yes. And it's important you pointed that out, that people really need to do your due diligence and do some shopping. Look around, find out. For banks right now, you're absolutely right, Tony. Most banks and credit unions, they're not giving as good a rate for a longer term, like a 1, 3, or 5-year CD.
They're shortening the term.
They're shortening the term because they know that as interest rates come down, they're going to have to give shorter, less rates. So they're going shorter term. Whereas an insurance company, it's very important. You pointed out, they're very similar to a CD in the fact that your money is safe. In a MYGA, your money is 100% principal protected. There's no direct stock market risk at all, just like a CD. Money is 100% safe. Also in a MYGA and a CD, very comparable, another pro of both of them, there's no fees. Absolutely no fees involved in these accounts at all. So that's a wonderful thing. Now, there's actually a little bit more of a benefit. Not only can you get a little bit better rate in a MYGA for longer, which is, I think, a benefit over a CD, but you can also get access to your money. Most MYGAs allow you to access between 5 and 10% of your money per year with no charges or no fees. Now, for somebody who says, I don't need to take all this money out and buy a house or a car, but I'd like to be able to access it a little bit, a CD, unfortunately, is probably not the best vehicle, whereas a MYGA, because of the liquidity provision, might be a better vehicle.
Yeah. Or if you need all the money within a year, then a 7-month CD might be better.
Then a 7-month CD is a lot better. Absolutely.
Yeah.
It all depends on your objectives and your goals. Yep.
Your personal situation. But the MYGA is very popular. And I know that fixed index annuities are really popular with a lot of baby boomers and people who are retiring because of the retirement income aspect that you can get for them, or you can get a long-term care rider on those. But we do need to take another break before we continue this discussion. This is a good one. And we're going to talk about other things, I know, like mutual funds and annuities, everything here. We're trying to touch on all the different aspects and places you can have your money for retirement. But first, we'd like to give away a book that's going to help you with that. It's called Own Your Retirement. And Jason, you wrote this book to help your clients and the prospects you meet with, but we're giving away complimentary copies. There's no charge. There's no obligation. We'll mail you one. There's no postage. All you have to do is be one of the next 10 callers to call in and say you heard about it on the radio show or the YouTube broadcast or a podcast. And that number is 989-835-7203. Again, that number is 989-835-7203. All right. You are viewing or listening to on the radio your Financial Empower Hour. And we've got a special, I saved this for halfway through the show. the listeners viewers that are viewing us on YouTube will notice something different. There's actually, we're going to have a background. And I don't know if you can see that background, but we've got a background there. We're going to keep adding things, and we'll have information underneath to make sure that people look at this. Look at this, Jason.
I like it, Tony. That's very
gosh.
cool. So for all of our viewers out there on the YouTube channel, what an enhancement. That's pretty cool. You don't just have to stare at Tony and I's ugly mugs all day. You can read some stuff on the bottom, and I like that. I appreciate that. Now for you, for our listeners on the radio or a podcast, you're like, what are they talking about? Well, go out there on YouTube, put in Jason Cryderman or Your Financial Power Hour. Pull me down, take a look. You can see on YouTube what we're talking about if you just have been a listener so far listening to the show. That's pretty cool, Tony. I like that.
Yeah, go to YouTube and search Your Financial Power Hour, and I thought that looked pretty cool. And so from now on, that's going to be there throughout the show. It literally just got done, so I thought I'd throw it up there.
I like it.
We just got that designed, and it showed up, so I thought, oh, Mitch got that up there for us. So that'll be cool moving forward. So, Jason, we're talking about various types of investments, and that you have your clients. When they come to you, you first assess what they have, where they're at, how much they have in their 401k or their TSP or their IRA or their 403b, whatever they have saved for retirement, what they have in the bank for their emergency fund or any money in their checking if they have that. You look at all that and then you say, okay, when do you want to retire? What are your goals in retirement? What's your risk tolerance? You have a couple of meetings. You can do this for our listeners, and then you assess where they're at. And then you recommend various things based on that. And sometimes it's, hey, let's focus on building up that emergency fund. Let's focus on rolling maybe into a Roth IRA, or we mentioned you might want to get a MYGA or a CD. So what are some other options out there?
Yeah, I think that's important to point out, Tony, before we get too deep in the options, is you did a great job explaining that when we sit down with a new family or new investor, we do spend anywhere from probably 1 to 3 meetings. And behind the scenes time, we're going to have probably 1 to 5 hours of assessment time before we get to the recommendations phase. So what that means is we spend a lot of time getting to know you, getting to know what are your goals and objectives. Where are you today? What have you been through, good and bad? And what do you envision in the future moving forward through into retirement? We spend a lot of time getting to know you, what your goals and objectives are, so that when we come to the phase of saying, yes, Tony, I think you should get a CD or a MYGA, or I think you should look at an investment or an income plan or a tax plan or whatever it might be, we have a really good foundation on where you are today, what you need, so that when we give these recommendations, it truly, from a fiduciary standpoint, it's truly going to be in your best interest, so you can be most successful accomplishing these goals and dreams, hopefully on the first try. What we don't want to do is just start putting on a blindfold and throwing a bunch of darts and just saying, hey, maybe you should try this, and find out we didn't know enough about you or your situation. We didn't know enough about your goals and objectives. We didn't pick the best vehicles to begin with. That would be setting you up for failure. And I promise all of our listeners and viewers and all the clients I work with that I do everything I can in my power, and so does my team, to set you up with success from the get-go. So we do put a lot of time and effort into it, Tony. So thank you for pointing that out. And so, we talked about some of these investments so far. We talked about what I call local and liquid. That's your savings, your checking, your money market. Then we went into a little more like a CD. And then we got into MYGAs, a multi-year guaranteed annuity. There's pros and cons to all these investments. And again, these aren't recommendations for anybody today. These are just different choices and options of investments that are out there available today. We can shift. Well, we'll touch on, we can shift into the stock market a little bit. Okay. Cause I know a lot of people say, CDs, annuities, those are more for just conservative, safe money. And that's true. But I know a lot of our listeners and viewers are out there thinking, gee, I want to hear them talk about growth and opportunity, and I want a little more risk, and maybe it's my longer term money. And so there's a lot of different investments that you can have exposure to that are designed more for growth. And I will point out, though, Tony, it's important to understand we can still have different levels of growth. Like you can have conservative, moderate, or aggressive. Those can all
within
be
the
different
market.
growth within the market, within levels of risk in the market. So that's important to point out as well.
Are you talking about mutual funds?
Yeah, I mean, you can have mutual funds. That's a big one. That's a really big one. But before I get into that, I apologize.
Sure.
I skipped over the index annuity that you mentioned at the last part of our last segment. Fixed index annuity you mentioned is a very, very powerful vehicle. It is not right for everybody, but it takes the benefits of a MYGA, that multi-year guaranteed annuity, of 100% safety, no risk, and for the most part, no fees. And it adds another element. It adds the opportunity to have growth linked to an index like the S&P 500, which could potentially give you more growth than if you were just in a CD or a fixed MYGA annuity. So that's an opportunity now to potentially keep the safety, no risk, keep the 5 to 10% per year liquidity provision where you can still access your money without any fees or penalties, but allow it to give more growth opportunity, more similar to the stock market, not just like the market, because you're not investing directly in the market at all. You're linked to an index like the S&P 500, but it does give the potential for a lot better growth in the years when the market does go up. You mentioned you could tie on some income riders, you could tie on some death benefit. There's all kinds of fancy bells and whistles and features that you can add on to the annuity chassis of like an index annuity or even a variable annuity. Now, be aware, though, there are generally fees that come along with every rider or added benefit you tie on. Very good chance there's going to be a fee that goes with that. So you need to know what those fees are. You need to be able to cost justify that it makes sense for you to pay that type of fee for that type of benefit.
And that's where you come in as the advisor. You do the math and say,
that's what we want to do, the math.
This annuity looks great, but if you add this and this, you might be better off just putting it in the market directly. We have to do the math.
Yeah, I mean, not only do we want to weigh the math. Yeah, you want to weigh the math and the pros and cons. You want to look at it. Is this the only option out there, or are there other vehicles or options that really might make more sense than this option A? Or is option A really truly with what you're trying to accomplish? For the risk, for the fees, for the benefits, it is in your best interest. Then by all means, that's what we're able to help kind of sort out, because there's just so much out there. It's really tough. So, but that kind of touched on the index annuity a little bit. Again, there's pros and cons to all these investments out there, but now I'll go a little further into that risk element where there's more opportunity for growth than even maybe inside of a CD or a MYGA or an index annuity. But now we start taking on some element of risk, meaning we could lose money. And those might be in things like mutual funds, ETFs, variable annuities that generally have allowable to invest in mutual funds inside of them, stocks, preferred stock, common stock, REITs, buffered index portfolios. These are all different types of investments that are more directly tied into the stock market, which is great if we want more upside potential, more growth. But a lot of these also come with more risk, meaning you could lose money, as well as fees. So again, it's not that they're good or bad. It's a matter of what are your goals and objectives? Where are you today? Where do you need to go? And what are the most efficient tools or vehicles to get you there? And Tony, a lot of times it's a combination of. A lot of times it's not all in one basket. It's a diversify. Put a little in savings, little in checking, little in a CD, maybe a little in a MYGA, maybe a little in it. You just got to look at all these choices and options, and don't put all your eggs in one basket. Make sure you diversify.
There you go. Well, and a book that talks about diversification that I've read is Empower Your Retirement, written by this guy. I don't know if you've heard of this author, Jason Cryderman, and it's a great book. We're going to give away 10 more copies. It's been flying off the shelf, so let's keep it going. Listeners, call 989-835-7203. Ask for your own copy of Own Your Retirement. Again, that number is 989-835-7203. You get the book complimentary. There's no shipping cost. There's no cost or charge to you or obligation. Get a copy of that book. All right. Here we are. It's your Financial Empower Hour. I'm your co-host, Tony Shore, and I'm here with Jason Cryderman, just reminding you who we are if you don't remember or just tuned in. It's been a great show so far, talking about various financial vehicles for people to invest and to maybe prepare for retirement or a retirement income. We've talked about annuities. We've talked about CDs and bank accounts. Now you wanted to talk about investments. And I think in our last 6 minutes here that we have, let's cover those investments.
Yeah, I think it's, and again, as we mentioned earlier in the show, this is definitely, we're not going in depth on any one of these investment options or choices or vehicles out there. We're just scratching the surface. We're going to talk very vaguely about some of the pros and cons like we've done so far. So far, you're right, Tony. We talked a lot about safer investments, less to no risk, less to no fees. But we got to talk about the other side of the coin too, right? We got to talk about those investments where you do have a heck of a lot more growth opportunity. When you get more growth opportunity, generally you're going to take on more risk and some fees as well. So those are things like mutual funds or common stock or preferred stock or what's called an ETF, an exchange traded fund, maybe a REIT, maybe a buffered index, maybe a variable annuity with mutual funds inside. So all these are different types of investments. Well, again, I want to make sure I stress is when we have money at risk, we need to be aware of what risk level are we exposed to, because you can have a stock or a mutual fund or a buffered index, a variable annuity that has conservative risk, maybe middle of the road, moderate risk, or very high aggressive risk. So just because it's a aggressive risk option doesn't mean it's the only option. So be aware of what level of risk each of your investments has. And most of them have multiple options. For example, you could have a mutual fund. The same fund could be available in 3 different or more risk levels, maybe a conservative, a moderate, or aggressive. So be aware of that. Also do your due diligence on different fund families. There's all kinds of different mutual fund families, ETF families out there, meaning the manufacturers or manager of those funds. You could have those funds in a managed account, like a lot of our families have, where we have a third-party fiduciary wealth manager, Gradient Investments, who physically manages the portfolio of these individual funds. Or you could do it on your own. You could be you could just have, I got 1 mutual fund or 5 stocks or whatever it might be, and kind of put your own plan together. But what is in your best interest, again, Tony, as I've talked about many times, is what are your objectives and goals? At what phase of life are you today? Where do you want to go? What do you have? And what makes the most sense from a fiduciary standpoint to get you moving in that direction as successful as absolutely possible, no matter what type of investment vehicle you decide to employ. And again, I'll say you shouldn't use just one vehicle. You should diversify. You should have your eggs across many a baskets, Tony, as we've talked about a lot of times on our show.
Yeah. Well, I know, Jason, that you've mentioned that before, where somebody will come to you, a new client or somebody who's listened to the show on the radio, they set up a no-charge consultation with you. They come in and they've worked for a company and either got stock options or they believed in that company because they worked there 30, 40, 50 years. And so the majority, they have like 80, 90, 100% of their retirement savings invested in that one company stock, or maybe one or two companies. And I know that, and I know that's a really dangerous thing. I know that, back when Kodak was one of the top traded companies, it was one of the biggest companies, in America, and Kodak stock tanked, right? With the digital camera.
Yeah. And other diversification.
Yeah, exactly. And you have to diversify. And that's why you look at everything from, stock portfolios at Gradient Investments to mutual funds. You mentioned REITs. What's a REIT? Now that's a real estate investment.
That stands for real estate investment trusts. And REITs are really unique. They have some awesome benefits and features, but they also come with some maybe potentially a lot more risk. Not many people are aware of what REITs are and how they work. I would make one broad recommendation to most of my listeners and viewers out there. If you're considering things like REITs, you probably want to make sure that's handled from a portfolio manager. You have somebody manage your money. If they choose to utilize REITs for you, that's how I would recommend utilizing them. I think they're just a little tougher, little maybe scarier and riskier to try to do REITs on your own.
Yeah, exactly. And that's why,
not that you can't do it, and not that a lot of people aren't. Yeah, I know. And again, Tony, this has been a lot, and this has been, I think, a really good show. And I didn't go really deep into a lot of individual investments, and that was by design. I don't want to
Sure.
overwhelm our listeners and our viewers out there. Really, the bottom line is there are a lot of different choices and options for investment vehicles, tools, strategies, management philosophies. There's a lot out there. So I would just encourage every single one of our viewers and listeners, do your own due diligence, do your own research, sit down with a trusted fiduciary advisor like myself, another member of my team, or somebody else that you trust, and really let them spend some time getting to know you. Where are you today? What are your goals and objectives? And then hopefully they put some real good time into doing the research on what are the best tools, the best strategies, the best options, and the best management philosophy to get you to those goals and objectives. Diversify, diversify, diversify. Do not put all your eggs in one basket, and do not be afraid to continually monitor, review, and update or change your investments in your plan. It's okay just because you started out with something 6 months ago for you or your advisor to say, hey, maybe we should get rid of it. Maybe it was a stinker, maybe it was great. Either way, review, monitor, update, have a plan, and diversify.
Yeah, I think that's huge. And so before we go, for our listeners and viewers out there, I want to put this out there. If you want to set up a consultation, if you've got a 401k, IRA, you've been saving for retirement, and you're getting to that point, you're in your 50s, you've got to have a solid plan in place. If you don't already, and if you do get a second opinion, give Jason and his team there at Great Lakes Investments a call. All you have to do is call 989-835-7203 and set up that no charge, no obligation consultation. Again, that number is 989-835-7203. And the web address for those maybe driving, can't write down that number, it's Great Lakes Investment Advisors.com. And that's advisors, ORS. So Great Lakes Investment Advisors.com. Hey, Jason, great show today, buddy.
Hey, always good to be with you, Tony.
All right. And that does it for today's episode of your Financial Empower Hour.